Hey guys, just wanted to talk about recent price action on Bitcoin and the crypto market as a whole. It's obviously a pretty scary inflection point. Just gonna say this up front. I don't know which way this is going to go with any degree of certainty. All I can do, like anybody else, is guess. So I'm just gonna outline the way I'm thinking about it and my exact plan. And if there is any takeaway here, it's to just simply have a plan so you don't end up trading this on emotions, which is a surefire recipe to get absolutely fucking wrecked. So let's go ahead and jump in. And once again, obviously not financial advice. If I say you here, I'm really just talking to myself. So just zooming out, 2017, 2020, 2021, and now. And this is the meat of the bull market. And we basically, just to separate out the PA, this is kind of like old news pre-ETF, ETF, and a little cool off. And then now we have kind of like the meat of the market structure of like the more recent bull market. Here's how I'm looking at this. We have this 1, 2, and then like 3 moves up. And with those in mind, we have had 3 scary phases of the market. Here's 1, here's 2, and here's 3. These all more or less aligned with some sort of trend line, right? A lot of people drew this in different ways. It more or less aligned with kind of like a longer term moving average, like the 50-week. But you can draw that line a few different ways. You can like go, kind of like this, and then, you've got like a little dangler below here, and then this looks like especially scary, and, you could like move that up a little bit and like, do one of those, or you could go wick to wick here, and then it's like, oh, wow, we didn't even get down there, this isn't bad, or whatever. You can really overfit this or be creative here to tell whatever story you want to tell. But the fact of the matter is, like, we're below the 50-week, which is at like 108, and we are roughly, this is 34%. This one was roughly 32%, and this one is, as of right now, it's like 20, what is that, 26%? Maybe a little bit more than that. But that's that, right? So we are in a drawdown roughly of the same, maybe even slightly less magnitude than the last 3. And in my opinion, this one is critical, but also a little bit less scary than the last one. Let me just give you some context on this. This is like, I was 0.0% worried about this first one. This was like way, way, way early ETF approval exuberance. We had no business even going to new all-time high based on like macro or whatever. This is just like, oh my god, I can't believe this finally happened. It happened under Gensler. Like, courts were pretty involved here. People are just like, oh wow, this is like a huge holy shit moment. We came up, and then over the course of almost a year, the air got let out of the balloon. And there were a lot of people who, during this, like, especially this, latter part of the PA, here, and especially in here, said, hey, I think the cycle is over, which is just, honestly, it's just very intellectually dishonest to say something with that much conviction, or even suggest that it's likely. I mean, this early, with, so much still ahead of it. So then we have the Trump inaug, or not inauguration, the election win. So Trump election win plus dereg hopes plus, I think at this point there was like a strategic Bitcoin reserve hopes, which was, you know, obviously kind of naive, even without the benefit of hindsight. And then now this one is, this was like, I'm gonna call this an echo pump. And so like what led to the moves down here, right? Like I kind of touched on this, like we needed to let the air out of the balloon. We were just like way ahead of the ball here. And yeah, so just like a year of chop grind down, but it was just still so early. Like, you know, there wasn't enough liquidity or broad risk conditions to like really support that. We arguably like really front ran equities on the move up here, and then just kind of like air out of the balloon. This next one here, this is the scariest drawdown in my opinion, right? Like this was the totally unprecedented global trade war, almost broke the bond market. And I actually sold 50% of my portfolio top to bottom in the early innings of like this massive move down. I think, yeah, during the early part of this initial down wick, I think it was like, or no, not even that one. It was like February 1 to 3. I was just ahead of that, and during that weekend where we're just like grinding down to hell, I sold 50% of my positions because I actually thought that might be a wrap on risk broadly, right? Trump was doing just some insane bullshit that was like pretty much unprecedented, and like if you look at like the S&P during that time, like right now people are like, oh, the S&P rolled over, but like, did it? Or is this just kind of like, you know, that percent scales to Bitcoin? But like, this is like a couple percent. Just eyeballing this right here, we like hit like not dissimilar, obviously less, but not dissimilar magnitude move down in stock indices than compared to COVID, right? Like this move down here during this just tariff trade war, again, novel and unprecedented, like kind of like speed ran most of this entire multi-year grind down. This was fucking terrifying. And you know, I was like, well, you know, I think we might recover. I don't know what the fuck's going on. This is very scary. But alts were still like in the early part of this wick down, like, you know, Sol was like 180, 190 or something. I was like, let me at least get some money off the table here. I'm gonna just take half out, more or less. And fast forward to you know, the recovery. I think this was obviously a higher high in Bitcoin, but alts, other than like ETH and like for a couple days, alts never made meaningful new highs here. This is just an echo pump on alts, like a pretty like mediocre one as well. I know like you'd say, oh, Fartcoin is like 4 or 5x off the lows, whatever, right? Like you had some things that did well, but this is still just an echo pump following the tariff trade war disaster. And in my opinion, we haven't had like net new like liquidity surge in since the Trump election win. But anyway, during these 3 moves down, and I'm gonna redraw them because it feels good to do while I'm hammering this point home. This move down, sentiment was absolute fucking dog shit here. This move down, sentiment was as bad as it possibly could be, starting here, right? horrifying. Like, never been worse, never been scarier. Maximum fear and uncertainty. Like, capital F, capital U. And then on this move down, Bitcoin started rolling over in July, especially if you discount this scam pump. But it did just obviously now start rolling over in July, even though it, alts started rolling over there too, because they're sensitive to this sort of stuff, kind of writings on the wall. But we're kind of in the same spot now where you have just an absolute whipsaw of like highs here, euphoria and highs here, euphoria and highs here, and then, a bunch of I told you so dunking for like literally an hour here before that shit evaporated. And now we're just at this like sentiment bedrock again, which, roughly aligns with, whatever, however you want to draw that. And so here we are again. Everybody thinks it's over. And I don't think it's over here. And I will give you my thesis on this and the levels that I'm looking at. I have a thesis called the transition zone, where basically there's the 4-year cycle people who, if they had a lower cost basis, they probably started selling in the summer, but the meat of it would ostensibly happen in like October, November, December. And then that's going to start to tail off. You might have like the more kind of like aggressive wait and see contingent of the 4-year cyclers, like what kind of like, oh, I'm going to push till January, or whatever, right? And so like, I'm going to say the meat of this happened October, November, and then will happen in December. And then January is kind of like an awkward one. You could, if you're a 4-year cycler, you could, mark out January and have like some arguments be made there. But then like by February 1st, it's like if Bitcoin is still above what I'm going to say like 90K, which wouldn't be great, but like at least 90K, the higher the better. I think the 4-year cycle thing is largely invalidated for most of those people. And some of them are going to chase back in. And I think we're going to enter like a new mini cycle, or at least an extension of this cycle. And, as long as like risk stays strong, like, the sky's the limit. And then like within this transition zone here, where you have selling pressure from the 4-year cyclers that's getting absorbed by newer parties and ETF folks and TradFi and new retail, blah, blah, blah. If risk broadly rolls over, like the S&P, like this breaks down kind of somewhere in here, start to like wilt back towards like, 65, 6,400 using S&P as a barometer. Like, I think that that's just like curtains on this market for X amount of time. So that's the way I'm looking at this. And what happens in here in terms of like a squiggle or fractal, like I don't fucking know. I don't think it's important to speculate on, but let's look at exact levels for this. I have that stashed in another chart. I think it's not on Kraken. I think Binance. Yeah, here we go. So let me expand this a little bit. Right, so we have weekly support up here at like 98. This isn't perfect, good enough. It's a couple pixels away. Weekly support at 98. Monthly support, or some semblance of monthly support here, at around like 96. There's like an area of interest there. And then if we go back to the weekly to check this out, then we have like, year open is at like I think 92 or 93k. But then you have this like round number meme at 90k. Let's actually go to the daily. So like I think obviously support's like a little bit higher, right? Like you could mark something out like, you know, between this cluster and these kind of like lows here, and then like the top of these wicks, there's probably good confluence. But just to like, you know, for the sake of argument for this like broad invalidation, because you want to give yourself like a little bit of fault tolerance here, I think it's appropriate, at least for me, to pull it down to 90k, because that's a round number, and like, you know, optics do matter in a market that's very TA driven. And below 90, you're really starting to get into the like just dank, rancid broth of this like, holy fucking shit, the bond market is about to like break irreparably, global trade war, panic, doom, uncertainty, you know, where like the S&P just went to the Stone Age, right? And if you go below 90k and like really start to get like below whatever like microstructure there is here, if you want to call that, into this just like stank, like you really have to ask yourself some hard questions there. Like what are we doing down there, right? And at that point, like, I mean, if, again, like the other chart said, like, if risk is looking kind of fickle there and stuff starts to stink on that end, and like things do start to look like they're rolling over, or like there's any sort of like, you know, like even like light gray swanny thing circulating, then like, I mean, like, I'm probably just gonna pick up the ball and go home there. There are arguments to just like, if you're in like Bitcoin, or at least like quote unquote higher quality stuff, there could be an argument just to like weather the storm, and I'll get into that in a minute. But like you really want to hold that, and like arguably a couple grand higher. Like anything below like really like year open, or like, you know, 93k starts to look like pretty abysmal, like 92, 93. But again, for the sake of argument, 90. So right, like looking a little bit more at the actual like detail here, you kind of have this wick here at like 98.4, 98.5, which roughly, you know, aligns with weekly support. And you know, there's some like bigger moving averages there too. So really what you want to see, and hopefully soon, is on the weekly. I don't know if we're going to get like anything super promising here, but you want to see like a little bit more wick here, right? And then you want to see something on next week like start to move up back above like this wick here, and generally this like kind of 98k level. And all of a sudden, and that's my base case in terms of like ranking likelihood, all of a sudden if you do that, that's kind of like a false breakdown, and like the other ones previous, you know, however you want to draw these, this is just sloppy now at this point, but like, you know, you will get hopefully some sort of bullish continuation, this like repair itself and like shoot up, right? That'll be pretty strong signal. So that's the way I'm looking at it. We're in a transition zone, and pull this bad boy back up here. Is this really not going to load in right now? There it is. We're in a transition zone. You want to stay in this purple box. The higher the better. Really, like, the next week is going to be pretty pivotal. I don't really know if you want to meander in here too long. But you want to stay at least in this purple box. The higher the better. And you want to just look at broad risk stuff, whether you're looking at like individual companies or macro stuff or general like esoteric like liquidity stuff that's not necessarily just like interest rates, or TGA, like, getting turbo filled during the drawdown or the shutdown, Freudian slip there, right? And if trade rolls over in here, that's gonna ask some hard questions or make you ask some hard questions. But if risks, stays relatively strong, goes to new highs, like I think we're gonna just have another leg higher. Looking at where we could go from here. Here's the question. Let me go to like hopefully a slightly fresher chart. Like, is this 2019 or is this 2020, 2021? Love how none of this is loading in right now while I'm recording a video. Are we in 2019 where it's kind of like a pre-parabolic move? Are we in like 2017 or 2021 where we're kind of like about to culminate and roll over? Like, I don't know. If I had to guess, I would say, and to be clear, I'm talking about in terms of like how much higher we can go. Like, are we gonna like rip? There we go. Jesus Christ. Like, is this 2019? Right? Like, is this analogous to here? Like, or are we gonna see some sort of like ripper to like 200 or something, or whatever parabola could shape up? I don't know. If I had to guess, I would say it's maybe just a totally different thing or a combination of those where like, yeah, it's been 2019-esque, but we're not necessarily due a like parabolic ripper of the same magnitude as 2017 in like December of 2017 or like 2021 where we're going to go to like 200 or 250 or whatever. It could just be that like we do great, my whole screen's frozen. We do just like one kind of modest leg up to like maybe like 130, maybe 140, maybe 150, right? And like that's it. But I don't know, and I don't think that speculating on like what does a new high look like is the right thing to do. I think another thing to consider is like what if risk is like a little stinky and we do like rebound here, but what if we kind of like do one of these up to like 120, or like what if we just kind of come up to like 115, or what if we get rejected at 110 or like 106, and then like something starts to stink and there's just obviously like not like any bids up here, and we just get rejected, and the 4-year cyclors are like, fuck yeah, like this is a good little like exit pump to like finish blowing my load into. And the new ETF folks get exhausted, and like what if that is the culmination? Worth considering. Like, we could do anything. Like, I really don't know. We could also just go straight down here. I don't know. But I think we're gonna get some sort of a bounce here because I don't think anything too stinky in macro and risk conditions has happened. I think that this drawdown in S&P is mostly just noise, right? Like, you could say that like this bad boy is oh, this is rolling over like at any one of these, which is like kind of of similar or greater magnitude, and we just kept ripping. Um, so I don't know. I say all that to say, as a takeaway, um, 3 moves down. Sentiment was absolute dog shit at the bottom of all of these. All 3 moves down are like roughly like, at or near a couple percentage points of 30%. Broad risk conditions don't look bad yet. It's kind of wait and see, and like the important thing is just have a plan. For me, I sold a whole bunch of my portfolio here. I felt sick to my stomach when I did this, but I did it because I had a plan written down where if my overall portfolio drew down to a certain USD amount, I would sell at least half of it. And even though like I was doing this at like 3 a.m. with tears in my eyes and it felt so bad at the time, I think I averaged exits of like 180, 190 on Solana. I think, I'd sold some, like, I had a big bag of whiff, and I think I sold it between like $2 down to like $1.20 or something. I forgot the exact amount. But like that felt just like stomach churning, and like, now like Sol is at like 135, and it went way lower, but today it's at like 135. Whiff is at like 35 cents, 40 cents or something like that. So hindsight's 2020, and not even hindsight's 2020. I think the fact that I had a plan and sold gives me a lot of security, because ultimately, especially a lot of the alts, not necessarily the majors, but I got like, in hindsight, pretty good exits on those, and I realized a lot of profit, and it made me feel rewarded for all the time I put into the cycle, and it gives me wiggle room to buy whatever eventual bear market comes, however low it goes, without needing to like drum up new cash from other sources. And I say all that to say, like, I was able to do that because I had a plan, and I also have a plan here, right? Like, if we dip below 90 and anything else is a stinker, maybe even regardless of that, like, I'm probably out, and I'll be okay with that. So that's that. Have a plan. Recognize that we're at sentiment lows, and this is really not that different from any of these. This was a rambly one. I really only intended this to be like 5 minutes, so if you hung out till now, God bless you. Catch you guys in the next one.